And as momentum in the electrical vehicle market grows. Welcome to Kitco Roundtable. I'm your host, Michael McRae, here at the Fastmarkets 15th Lithium Supply and Battery Raw Materials 2023. I'm with Paul Harris. Glad to do this in person, Paul.
Hey, Michael. Yeah, always good to do it in person.
I am going to let you hand it off at this point, and you can introduce our guest because we have a special guest with us, Paul.
Absolutely. Great pleasure to be joined this afternoon by Raju Daswani, who's CEO of Fastmarkets and a former colleague of mine from 24 years ago when we both worked in the same office in New York.
That's right, and good memories abate. Very much.
Absolutely. Yeah, welcome and thank you for joining us.
Raju, I think also as well too, we are at the Fast Market events which you're hosting. Thank you very much. We're having a great time as well too. Just a little talk about this as well too, the growth of the sector, but how you're actually seeing it at this conference, because it seems like there's a lot of people here right now.
Well, I mean, obviously this particular market has so many tailwinds behind it right now. So we're in a good place, and everything's been accelerated by what's happening out there in the world, the huge focus on climate change, all the drivers that have been put in place, governments, regulation, targets around electric vehicles, is really just been a real accelerator for this market. And we've seen things just go through the roof from a perspective of demand for critical materials like lithium. And as a result, clearly it's created this great demand, and we're delighted to have this conference running here in Vegas and seeing this many people attending. And I think there is so much curiosity and also so much need for clarity of what's happening in the market. And again, that's what the conference is intended for.
Well, let me come in there. Yeah. In your opening address yesterday, you said you got about 1,100 delegates from 150 companies from 35 countries?
No, we've got actually 1,100 delegates. We've got more, representing more than 450 companies, and they are spread across more than 35 countries around the world. So it's been a phenomenal presence, and it's a very global crowd here. We've got 150 people plus from Asia, so really good representation from Asia too, which of course is going to play such a crucial role in how this market develops going forward.
I always find this must be old hat for you, Raju, but I always kind of find it still a novelty that there's actually automotive companies at a mining conference, or at least a pseudo mining conference as well too, because I've been going back to the BMO conference as well too. I always kind of found it surprising.
Well, I think people are much more awake now to the fact they've got to understand the supply chain right from source, right the way through to consumer. And I think automotive companies are no different. They're such important players, such big consumers of commodities, that they really need to understand that supply chain. So it really doesn't surprise me. We've actually been always pushing to have more representation. And what's incredible here at this event is to see the likes of Tesla and Volkswagen and BMW and BYD all here attending and really wanting to understand what's happening with that supply chain and how it's going to impact their own targets, their own projections for the growth of this very important market.
Let's talk about lithium. So it's been a very eventful year. So we had the start, and obviously like the huge drawdown that we had on it, and then we've seen the recovery that has come back on it. I had this question that I made to Matt Fernley earlier, and it was just with battery materials review, and I was asking, we see more capacity coming on. Is eventually lithium, is it going to be somewhat like a copper, for instance? Is it going to reflect economic trends, for instance? Or is it something that's much more constrained, and then you're still going to see this volatility going forward?
Look, I think copper, which is of course is known as Dr. Copper, because it is such a great forward indicator of what's happening in global economies, still plays a very central role, simply because of the scale and breadth and use of copper in our lives today. And I think steel to some extent too. But copper always has been used and thought of in that way. Lithium is very much an indicator right now of trends towards around electric vehicles. So I wouldn't say it's quite at that position yet. Lithium is going to be a key material as we ramp up to full electric vehicle penetration, which will still take some years. And after that, I think you'll see probably things settle down a little bit. And then there's lots of change in the dynamics, because we're going to see more lithium recycled material coming on stream. And fundamentally, I think the link between copper and everything to do with electrics, which is effectively a good indicator of GDP and underlying economic health, will still exist. Because even if you are increasing your use of electric vehicles, is actually also driving up demand for copper as well. So copper still is, I would say, retains its position as Dr. Copper.
Raju, look, you have a lot of the major automakers here right now. Are they starting to understand lithium dynamics? I mean, you can build the gigafactories, you can build the the manufacturing hubs, and they'll take a handful of years. But it takes like a decade, I guess, maybe 8 years to actually build these lithium projects. I guess kind of the light bulb has finally come on for the automakers in terms of their supply.
Yeah, look, firstly, I think the lithium industry itself is still trying to work out the lithium market. And I think there are so many complexities involved. And I think you're right. The automakers know that anything to do with extractive industries is, one, highly capital intensive, and there's a huge pressure to raise the financing to get these projects off the ground. And there is a huge lead time involved in getting the supply available to the marketplace. So I think, yes, people are waking up to that fact. And of course, volatility in the market hasn't helped, because you're seeing these huge run-ups in price and everyone wants to build a lithium project. Then you see a huge drop and everyone can't get financing for the lithium project. So I think we are playing our role through Fastmarkets, obviously, by creating more transparency in what's happening in the price. There's more clarity around it, and transparency also brings options for how the industry can manage risk. So I think risk management will help play a part, especially if you're a junior player. You have the option with your investment to show I can lock in some of the returns, which helps to promote that production coming online. But I think people definitely understand that there's always overestimation of what's going to come online and what actually does come online. And I think that realization has not only been the case for lithium, but it's been the case for every commodity. And I think definitely the automakers are beginning to see that. And I think it's more apparent with lithium because of the huge exponential growth in demand that's happening now, and that is projected to continue to happen over the next decade.
Can I sort of come in there, Raju, because a lot of the speakers have said that attempts to forecast demand pretty much have failed. They always get it wrong. Same with pricing, and also with battery compositions. They're changing so rapidly that it's very difficult to look out more than beyond the end of the week. And as Fastmarkets, you're an entity that helps to create transparency and forecast what's going to come in Europe. How do you deal with that extreme unpredictableness of what you're dealing with?
I think you have to keep your eye open and ears to the ground, because there is, obviously, we know the pace and rate of technology and innovation is so fast today. We saw it in the pandemic with a vaccine being developed in a year, and so new technologies can actually come into the market pretty quickly. But they still need testing, there's still a lot of work that still needs to be done. There isn't really a very strong, viable alternative in terms of what the lithium-ion battery gives and provides for an electric vehicle producer. So for now, I think that risk is minimal, and I think sometimes a little bit of scaremongering going on too in terms of what could be around the corner. I think the market is really committed to the lithium-ion battery, and we will see, as a result, that investment continue to take place in lithium.
I don't think I would understand it, but it's really the choices that an automaker would have to actually make in terms of like the battery chemistries that they would use, because you're playing on, like about 12 different chemicals that you can, and then you can think of all the derivations they'd have. Never mind, you'd have sodium lithium. Never mind what your projections are going to be. It almost sounds like logistics at Amazon right now as well too, because you would have so many inputs into determining about what the battery chemistry that you're going to be using. So, I just wanted to, there's a couple things that have happened in the lithium space, and I think they've been very monumental. We talked at the start about the fall in lithium prices and the comeback. It was also the semi-nationalization that happened down in Chile. We've also seen some very big M&A deals that have happened in the space. But I'm really wondering if the pivotal thing that happened this year was the Chinese market really coming to the fore. And I mentioned that on a couple of pieces. For instance, so BYD, they had their first quarter. They beat Tesla by about 100,000 vehicles. That is adding their plug-in hybrids along with electric vehicles. You see the aggressive push that they're making right now into the export market. You've been talking to the BYD people. The other one is also that today they announced that they were going to be giving tax credits by the Chinese government for this. And, we've seen their ability to drive down prices in that. I'm just wondering if, kind of the horse is out of the barn at this point right now as well, too, because it just really looks like China is really going to be running ahead of far of any of the other automakers.
Well, I think certainly it creates its own set of issues, because definitely the Chinese dominance in the electrical vehicle space globally is so immense today, and BYD is, of course, the forefront of that. And I think many governments, many countries that want to hit their electric vehicle targets are going to have to rely on BYD companies, Chinese companies such as BYD, to be able to fill those gaps. I don't think that's being talked about now, because most nations want to ensure that they have the infrastructure domestically to be able to produce what they need to hit those targets. And also, of course, the whole area of deglobalization as well has led to trying to secure the supply chains. And of course, as companies like BYD and China emerges as real powerhouses for electric vehicles, it's going to have a huge impact on the supply chain, on the availability of materials, and everything that comes alongside that.
Question here, and what it was is around a lot of what has been happening with lithium, a lot of it is happening in critical minerals, has been driven by the concerns that are happening in Asia, specifically China, and the concentration of them actually having those mineral resources, which has been a concern. We've seen that happening with chip wars. You see also with the tie-up in the cobalt to stop the nickel, because they have like about 70% of supply here right now as well. So I'm just wondering, though, isn't that kind of a little bit of a concern? Is it sustainable? Because what we are really being driven by is that we've had all of this government support. We've had the Inflation Reduction Act. We've had everything that has been passed. These have been very much kind of driven by politically and have been set up. The concern would be is that the IRA has become a bit of a political football, I would say. If you get a change of government, you could very well see people going back to status quo, let the markets take over as they want. The other thing that I also wonder as well too is that it would really seem to be in China's interest that they want to actually maintain healthy relationships or friendly relationships. Things have kind of split, I would probably say, over the last handful of years. But you would look at China, they do have difficulties with their economy right now. They are an export economy. It would seem like very much they would want to mend their fences. We go back to the beginning of the last decade. We had the run-up in rare earths because of all these same concerns. Rare earths is a strategic mineral. We have to develop our own supplies. That carried on for a little while, and then it just went back to zero again. You saw that China came back and then just started supplying the market, and then everything went back to sleep again as well too. I just wonder how supportable this time, or how much momentum is there behind critical minerals support for industry, critical minerals policy. How sustainable is it?
Look, I think this is going to continue to be a feature in global politics. It is such a strategically important area today, and the risks of globalization have become apparent post-Russia-Ukraine war, the geopolitical tensions that exist today around China too. And as such, it's really important that what we're seeing are nations prioritizing the importance of securing their own supply chains. And I think that's really been driving it. And there are three key reasons, I guess. One is, as I've just said, national security concerns. Two is the economic opportunities too, that having those supply brings in terms of more jobs, building the infrastructure, but also environmental goals in terms of, these critical materials are all seen as absolutely essential to be able to achieve the environmental goals that governments want to reach. And so having security around them is very important. Having said all of that, if the balance of power sits with China, if countries like China have the power, whether it's through the production of the base material or the processed mineral or the end product, we've just come out of a session discussing the IRA, and if China is best placed to provide the best and highest quality technologically developed batteries, or the systems that can be used for energy storage, then it would be reckless also to exclude them from that global complex. And I think eventually that realization has to come around. Just as you said with rare earths, what happened? Because ultimately it wasn't possible to be able to produce rare earths on that scale as China can, and we saw that reversal of policy.
I think an interesting thing there with China's industrialization, China invited Western companies to set up factories and take advantage of tax breaks, low-cost labor. But with the technology transfer element, China rightly or wrongly copied a lot of Western technology. But now with the IRA, you cannot qualify for the credits if you've got Chinese capital or influence or ownership in your project, which precludes any kind of technology transfer coming into the USA from Chinese battery producers, which, as you mentioned, are the leading edge producers. So that seems to be very short-sighted.
I mean, as Michael has just said, ultimately, IRA policies that are in place today can be changed tomorrow. And politics is such that, especially US politics at the moment, we have this ding-dong from one administration to the next. So we'll wait and see. I mean, I think you're right. I think the constraints it puts on the ability of countries like the USA to hit its goals will be immense. And I think ultimately that is something we'll have to budge to.
Raju, another comment you made during your opening presentation was and you put up a disclaimer. Most people do disclaimer about, forward-looking statements, but you said, remember, you've got the whole industry here. You said, remember not to engage in anti-competitive behavior. And sort of leading me into my question in a long-winded way, there hasn't been any talk about consolidation in the presentation program. I wonder if that was a deliberate strategy, a deliberate decision, a conscious decision, because there's a lot going on. And Albemarle had a big offer rejected earlier this year, but they didn't talk about that in their keynote. Alchem and Livent got a big deal on the table at the moment. They didn't talk about that at the moment. M&A is going on in the sector, but it hasn't really figured in the program. Why is that?
That's a good question. I think mainly because we've focused around the market rather than specifically around consolidation. And I'm not sure that the consolidation has a direct impact on the market trends we're seeing. Having said that, I think it's a really fair challenge. And clearly, we have seen these deals taking place, like Alchem, as you just mentioned, and Livent. And I think there's a lot more consolidation that will probably happen in the future, but it's going to be probably focused further down because you have a lot of new startups, junior miners. And if you just take the sheer volume there, that is a market which is going to have to consolidate going forward.
Okay, and another sort of theme I've picked up on through various of the presentations is about black mass. Mm-hmm. That's been a big theme, and I'm not talking about dubious spiritual ceremonies here, but what is it and why is it important?
Well, black mass is effectively the material that's produced from your battery waste. So effectively it's production scrap that happens at the battery manufacturer. But the more exciting part of the circular economy around batteries will be all the batteries, end-of-life batteries that come back into circulation and go back to the scrap route. And that's where all the excitement is around, is what's going to happen and how much of the overall supply of lithium eventually, once things start to settle down, and we're talking maybe 10 years, 8, 9, 10 years from now, what contribution that will make to the overall lithium market and supply. So once you have a sort of constant level, you can then expect you're going to have cars that are being produced today that are going to be getting scrapped in 10 years, and those volumes of cars are of course increasing all the time exponentially. So the prediction is, and there's really a wide range of predictions here, whether it's going to be 10% of global lithium supply is going to come from black mass, and the bulk of that, 60 or 70% of that black mass is going to come from end-of-life batteries, or is going to be 50%. So there's a huge discrepancy around what that number is. Now again, one of the roles we play is to incentivize the circular economy and incentivize the collection of that scrap. And the way you do that is to make sure that the price is very transparent. And right now we've just actually very recent last month launched a payables price for the black mass market, which effectively creates that transparency the market needs and will help to actually allocate more investment into the market to drive the demand for black mass. And there's a huge amount of demand now because there's actually a lot of processes that have come up to take black masses and process it and extract those critical materials back out from it, but there isn't enough black mass to feed them. So actually there's a huge amount of demand for black mass, and actually we're going to see prices going up quite steeply.
We're going to see organised crime go after electric vehicles to cut out the batteries in the same way they've been cutting out catalytic converters.
I mean, I can't talk for the international crime trade, but I assume anything that's where there's value attached and easy to extract will probably be extractable. I think it's probably, and I don't know, I'm not an engineer either, so I'm not sure how easy it is to take that battery out of the vehicle. But if there was enough value in it, and they could, I'm sure they would. I mean, I think they just take the whole car these days.
The one thing that's run through me at this conference has been the word ESS, and that's come up quite a few times. That's with RK Equity, that was talking with Phoebe with Fastmarkets, that was talking with Matt Fernley with Battery Materials Review, because talking about that, EVs is great, but if you look out over the medium or long term, you're really going to see a lot of growth in, energy storage sector, the large batteries that are going to be actually helping out with renewables. And there's just, even looking at that, that's going to be a really big win for critical minerals.
Absolutely, and I think if you're really going to be able to harness the power of renewable energy, you're going to need more ESS, energy storage systems, because you need to be able to produce that power in the day when the sun is shining, store that energy, and then use it and consume it in the evenings when you need it to power your heaters or your air conditioners or whatever you're using. So whether it's taken from a residential perspective or an industrial perspective, the application is the same. And this is where an energy storage system is effectively, in its most simplest form, a battery. It's about using batteries, armies or battalions of batteries to effectively store that energy and then be able to utilize it or feed it back into the grid. So that is effectively going to be the way we're going to be able to shift away from electricity generation from more traditional methods and shift it to more renewable sources so we can then store the power and then release it when it's needed into the grid, into your house, or into your car.
What is the top trend that you're looking for in the lithium space for the remainder of the year? I'm going to start with you, Paul.
Me, okay. I follow the junior space quite closely, and one of the key things that's been very noticeable this year is the expansion of the dozens and dozens of new lithium exploration juniors that have come out and emerged, and obviously are being financed, and perhaps this is one of the reasons why juniors in the precious metals and base metals finding it so difficult to get funding, because a lot of funding seems to be being channeled towards lithium juniors.
Raju, what are you looking for in the lithium space?
Well, I think the big trends that people will be keeping a very close eye on is what's going to happen to price. I mean, we have seen this roller coaster ride of the last couple of years, this big ramp up in prices and the big decline of 50 to 70% back down. And now we're seeing the grassroots of a slight recovery in prices. Will that continue? Yeah, we're going to have another big run up. Are prices going to stabilize? Lots of questions to be answered. The volatility is certainly no one's friend, except for the people who are offering you hedging services. But and it's kind of important to get a period of stability where the market can actually make some long-term decisions based on the fundamentals and the fundamentals playing out in terms of the price.
Are we getting to the price also about demand destruction as well? That's always a concern if you go up to there.
Well, there's a lot of natural ceilings to the price. And when the prices get too high, it will induce substitution. We saw a lot of talk about sodium-ion batteries when prices were at their peak. That's kind of faded away a little bit. When prices get high too, you get extra supply that comes on stream. You can start utilizing lower quality lithium commodity products, whether it's lower quality spodumene or lepidolites in China that can get them come into, and therefore that increases supply and creates a little bit of a buffer in terms of where prices can go to. So that's always going to be the case, and high prices will always induce substitution or alternate or open up the door for more swing supplies to come back into the system.
I love covering the lithium space because it gives me an opportunity to say the word lepidolite. It's like my favorite word.
I always have to say it very carefully in case I get my tongue twisted around it.
You just have to fall forward.
Indeed.
The trend that I'm looking for is how would you say, who's the top dog, BYD or Tesla? We did see the numbers, I mentioned them before. There was more units that was produced out of BYD in the quarter, but we also see you see the global reach that Tesla has, but it seems like BYD has really got a lot of momentum right now. So who are you going to say, who's the king?
The question is, at what point is BYD going to fit a car on a Chinese space rocket in 72 miles?
That's true.
Indeed.
That's true. Raju, this has been a real treat. Thank you very much for hosting us at your event. When's the next one going to be?
You're always welcome, and the next one will be we have another event coming up in Europe in September, and we run this event in Asia in Europe. And of course, this is the big event, which is here in the United States, and it will stay in North America. And we're back here in June next year, and we'll see you here in June.
Much appreciated. On behalf of Paul Harris, Raju, and myself, have a pleasant weekend.